Good afternoon. This is Professor Menton, and this is session 3. And in session 3, what I'm going to do is walk you through some of the journal entries, and then from that point forward you should pick up and do your own. I'm also going to walk you through this Excel function called payment, PMT. Now, for the 2101s, this is not that terribly important, although I think it is interesting information for you to have, and it is required, I guess, for the first entry, but at the same time, it's the only time that you will actually have to do that. Yours looks different, that is, your Excel sheet looks different from the 2102s. So just bear in mind that you're not going to actually have to come up with these numbers, but I want to kill two birds with one stone. So I want to show the 2102s how to do this payment function, and of course how do you do an amortization schedule, but that's also good information for 2101 students to have as well. Alright, so without further ado, if you'll go ahead and open up your an instance of Wave, and you want to go to Accounting and Transactions, and the first one that you should see, and maybe I should regress just for a minute, you should see this entry right here. If you have any other entries, you want to click them here and then delete them, okay? But it should be an entry that shows 818-125-00. Now, let me go down here just for a second to Reports. And when I go to Reports, you notice you have the profit and loss, the balance sheet, the income statement. Actually, profit and loss is an old term that hasn't really been used in accounting for probably 25 or 30 years, maybe more. But down here toward the bottom, you'll see a thing called trial balance, and you should click the trial balance. And when you look at your debits and credits, you notice that 818-125 on both sides should be what you have in your Wave account. If you do not, you need to go back and watch session 2 again and make sure, and first thing you should probably do is just check and walk your way down through these and see which ones are out versus the Excel spreadsheet Exhibit 2 on the trial balance side. Okay, so, and let me just make one other thing, kind of make you aware of one other thing. When I go to Reports, and if I look at the balance sheet, I want you to notice that the balance sheet does not conform to the trial balance, and the reason is that the balance sheet also has some negative numbers in it, and inside this long-term liability you have accumulated depreciation. So the total assets in fact are $745,000. If you were to add back the $73,125, I believe it is, for accumulated depreciation, you would come out with the 818 number. When you add these two together, the total liabilities of 550 and the total equity of 195, then you should come back to your 745. And that's what you should have in the balance sheet at this point. And remember, again, the reason that you, and that's a summary. If I look at the details here for a second, you notice that the accumulated depreciation here is a negative number, and that's because it reduces the value of the asset, the long-term asset. So that's just a couple of things kind of to get you started. Let's pop back over to accounting now, and we want to do transactions. And again, you should only see this single transaction here. Now, also what you want to have open right now is Exhibit 1, because Exhibit 1 gives you all of your entries that you have to make, and it's in verbal, or it's in written form, and what you'll have to do is convert it here to the Wave accounting platform. So not a big deal. We're going to go and walk through a few of them just to show you how it works. But I'm going to pop back over here to my Exhibit 1, and as I look down through here, they gave me some information about free accounting packages and all that sort of thing. And this is transactions for the period June 1 through the 30th. And so I have on this one June 1, since I did the trial balance as of June 1, you may want to make this June 2. So I'll just change it right here. Maybe I will. Instead of June 1, I'll have June 2, and then that way I don't have to worry about if I want to run a June 1 statement, a trial balance, I never have to worry about an entry from June coming into play. Alright, so it says on June the 2nd, I bought a new billboard maintenance truck for the business from Joey Johnson Motors. Details of the transaction follow. And the model, it's a made-up VIN number, an invoice cost of $71,500, an interest rate of 12%, and the month's financed $84. Okay, so it tells us to go ahead and do the PMT function in Excel. So let me go back over here and walk back over to Excel. And this is Exhibit 2. And you, if you're a 2101 student, this information's already here for you. And if you're a 2102 student, it's not yet. So I want to look at 2102 and show them how to do this entry. But it's also important for 2101 students to start learning this, because for instance, if you want to know what your payment is going to be if you want to buy a new house, this will help you with this information. It does not give you insurance costs and other escrow accounts like taxes, but it will give you a good idea of what your payment will be. Same thing true if you want to buy a new truck. As long as you have the amount of the cost, the interest rate, and the amount of term, or the term in months, then you can create this. Okay, so it told us that we have a new truck that we bought, and if you come up here and you'll see this little FX here, if you click it, mine already pops up at PMT. If it doesn't, what you do is type in PMT right here. I'm just getting rid of the extra things and go. And when you do, you'll see the PMT function. So I'm just going to double click it and get it up. Now the rate that it tells you that we have is 12%. So I didn't choose that by accident. There are 12 months in a year, 12% rate. That means that the rate, in this case, because we're dealing in months, a payment happens every month for 84 months. I'm going to convert the rate to a monthly rate. Now I could do it one of two ways. I could either go 0.12 divided by 12, which is 1%, or I could just put in the 0.01, whichever floats your boat. I'll just put in 0.01 here, but it doesn't really matter. The second thing is the number of payments that we have to make, and the number of payments is going to be 84. The present value is the current value of the loan, and so we started with 71.5. We have no indication that we put any money down, so it's going to be 71.5 in this slot, and then just hit OK. And notice what we have here is a negative number, because that indicates that we're going to put something out here that is a reduction in cash. So if I want that to be a positive number, which makes it easier to work with, I can just come over here and go times, that's the asterisk, minus 1. And when I do that, even though this is showing up as red, it doesn't show up as a negative anymore. Okay? So it's still a positive number here. I just have it showing as red, so if I were to put it back into automatic black, then that's what you see. Okay? So it's now a positive number, and that's important, so I don't have to worry about switching through signs as I walk through these problems. The beginning balance for this amortization schedule is $71,500. Now the payment on interest, the payment of interest, is going to be the beginning balance, so it's equal to, and all transactions or all formulas in Excel start with an equal sign. In some programs it may be a plus sign or whatever, but in Excel it's an equal sign. And just point to the 71.5, and that's important because we're just referencing cells here. We're not referencing anything else. The interest payment then is going to be times, that's the asterisk again, 0.01. And so you can tell just by moving the decimal over 2 places here that 715 is actually 1% of $71,500. Now, the interest does not come off your principal. The only thing that comes off your principal is the difference between the interest and the actual payment. So I'm going to say that this is going to be equal to this number here. This is your payment, but I have to make it an absolute reference, so that's F4. And you notice that when you click F4, you get a $ before the before J, the column heading, and 6, the row number, and that keeps it always referring to this number, because if you don't, it won't work properly. And the principal then minus the interest rate. Oops. And so now you see that for the month of June, I have a principal that's coming down of $547.17. Now that represents the short-term liability reduction. Short-term liability reduction. All right, because we have to break these up in terms of short and long-term. Now that's been done for you on the trial balance, so you already have the number in there that you would have for the entire, 7 months, June, July, August, September, like that, through the end of the year. The ending balance then is going to be equal to this number here, the beginning balance, minus the principal. You don't get to reduce your principal balance by anything other than principal. And so you see that this drops a little bit. Now what I'm going to do is I'm going to come over here, and this is for the 2102s, because right now I know that I'm going to spend in cash an interest payment, so interest expense of $715, and short-term liability reduction, the current short-term liability reduction of $547.17 to get to this $1262.17 in cash. Okay? Now, what I want to do here is, because I've got an amortization schedule to do for all of these items, then what you're going to need to do is you're going to have to make the ending balance the next month's beginning balance. So I can just put equal, point to this number, and go. Now what I can do is I can grab these three numbers and bring them down. Now, one thing, to know that you're on the right track, you should see this interest number dropping each month from this number down to this number, and you should see your principal payment go up each month. And that's because you're actually reducing this guy here every month. All right? So now if I highlight these two guys and make the fat cross a skinny cross and drag it on down through the 84 months, whoops, got a mistake. I'm going to get rid of this. Okay, I drug 2 down, meant to only drag, should have only drug 1 down. So let's see if this brings it to the right number. And it does. So you want to make sure that your last payment ends up with a balance of 0. So you'll notice that the last payment I had only $12.50 worth of interest, and the rest of it in principal. So sorry about that little glitch. But anyway, what you're going to do is just grab this one number here because it's complete now, and drag it on down. And it should come up with 0. If you don't come up with 0, then there's some error in it. So you need this in order to make your first entry. So if you're making June's entry, you're going to debit the interest expense for $715. You're going to debit the short-term or the current vehicle payment, note payable, excuse me, for $547.17, and credit cash for $1262.17. Okay, so let's pop back over to Wave and let's make that entry. So I'm going to come up here where it says More, drop that down, and add a journal transaction. And so now I have another journal transaction. And notice that it defaults to the 13th. I'm going to change that to the 2nd just because we probably need to have that kind of discipline in here. And the description is to made truck payment or made new truck payment. And here in uncategorized expense, I don't need to put another description in there. Uncategorized expense, I want to find interest expense. So I come down until I find expenses, and here's interest expense. The debit there is $715. Now, I have another column or another row here, so I'm going to click on it, and I'm going to find the liability, new vehicle, notes payable, now here, notes payable, vehicles current. So it can be both of these. You have some existing vehicles and you have the new vehicle that'll all hit the same note payable account. And I don't remember exactly what it was, so I'm going to pop back 547 something, I think, 547.17. And now I'm going to add a line because I have two debits here and no credits, but I still need a credit. Notice that right here it tells me that I have total debits of $1262.17 and total credits of 0. So the difference is this $1262.17, and that's going to be coming out of cash on hand. And notice what they do is they don't put these in the order of number, okay, or numerical order. What they do is they put them in alphabetical order, so that's the way that you can go through and find your actual count. So 1262.17, now you see that my difference is 0. So I know that I've got an entry that's in balance, and every entry that you make must be in balance before you save it, because if you save it otherwise it'll throw off an error. So save. And now what I'm going to do is come back over to my Exhibit 1, and what I'm going to do is I'm going to highlight this right here. I'm going to highlight it and give it a color of 0. I mean a color of yellow. And the reason I did that is because now I know that I've done that entry. So if you go down through here, and each one you go through, if you will highlight it in yellow, then you'll know that you've actually recorded that entry, and you don't have to worry about doing it again. Okay, on June the 3rd, we sold $1,500 in print advertising to Jones Building Supply on account. Well, that's on account of they're not going to pay you the cash right now. They're going to pay you later. So I'm going to come back over to, back over to the transactions page, and I'm going to come up here to more, drop it down, add a journal transaction. And the description is sold print ads to Jones. And come down here to uncategorized expense. You don't have to put in a description there. You've already got it up here. Drop this down, and you're looking for the asset accounts receivable, and yours should say, because you entered all of these customers, accounts receivable Jones. All right, now I didn't create this in mine yet because I'd already done it in another Media Moguls session. So what I'm going to do is I'm just going to hit accounts receivable here, but you should hit 120-01 Jones. Now that's important, so make sure you do that. And I should have went ahead and created those, but I didn't. Okay, so it's accounts receivable. Remember, yours is accounts receivable. Should show up as Jones Building Supply $1,500. And uncategorized expenses down here, uncategorized income. If I drop it down and find income, print advertising revenue, that's what we're looking for. And over here on the credit side, because you need a credit, $1,500. Now, why do you need a credit? Well, because print advertising revenue, and all revenues are part of the equity section that makes equity go up. Equity goes up on the right. Liabilities go up on the right and down on the left. So in the case of revenue here, just remember that all income items will go up on the right hand side, all expense items, that is reducing revenue, on the left hand side. But we'll go through a couple of more here and maybe you'll see what I'm talking about. And now you see that I have the made the truck payment, I have the sold, and you know what I didn't do is I didn't change my date. So I can go back up here and change that date, I think, if I do it correctly. What in the world? Maybe I have to do this first. There we go. Okay, and of course if I do one of these wrong, all I have to do is come over here to the edit button here, and this one will allow me to make changes as I want to. I don't know exactly, I guess these are doing in reverse order, so the oldest one first down at the bottom and the newest one on top. Alright, so and notice also that what's happening here is we're having, this is a reduction of cash, okay? And the reason that we did a cash reduction here is because when we did this entry right here, this 1272.17 came out of cash. Okay, so that's what it's showing you up the top there, what your cash balance is, which is kind of handy actually. All right, the next entry, and I'm going to come back again, and I'm just going to, you don't have to do the whole thing, but just do some of it. Paid Weatherly office supply, $300 for office supplies. Now this is a cash transaction. All right, so you're going to hit office supplies expense, and again you can do it either way. You could have set this up as an asset, office supplies, and then written them off as you came to the end of a period, or you can say that they're all expenses, which is what the real world does, and then if you need to set them up, you can set them up as an asset, whatever's left at the end of the period. That rarely happens, by the way. Okay, paid Weatherly office supplies, $300. And so I'm going to come up here and I'm going to create more, another journal transaction. Paid Weatherly for office supplies. And down here, office supplies in this case is an expense. So come down until you find expenses. And then because they're in alphabetical order, you'll look for the O's. Okay, and it was $300. Just put in 300. Come down here to the next section here, and it came out of cash because we didn't pay it any other way. And I think, by the way, you can probably, let's just see if it works. It'll pop up after the first couple of letters, so you should be able to just start typing and get into whatever you want. Alright, notice again that the difference is 0, so I have total debits and credits that are in alignment. They always have to be equal. Save. Okay? And again, like an idiot, I did not change my date. So let me go back and change my date to whatever that was, the 3rd. Change the date. Yeah, I don't know. It has a little bit of a tendency to glitch, I guess. I don't know. Okay, so I don't need either one of these anymore. And let's go back over again and find the next one. But not before I come through here and just put that in. So I know that I've made that entry. Bought business supplies from Master Print for cash. And this will be office supplies again for $200. Then we come over here, more, add a journal transaction, and up here I want to change this date to, I don't know, whatever it is, the 4th maybe. And here, bought office supplies from Master Print. And down here again, you're just going to find office supplies. So drop this down, find your expense section, go down till you find the office supplies expense, $200. Come down here to uncategorized again, and you've spent cash. So go down until you find your cash on hand, and come over here to the credit side, 200. And notice again that when I make this entry, I have no difference, and I cannot have a difference for it to be a valid journal entry. Okay? So as I look down through, you see that each one of these is showing a different journal entry, and I have to do this for every single one of these things over here. Again, just a good practice to do this. On June the 5th, we paid the Georgia Power bill $375 in cash. Cash, okay? So, June the 5th, go to More, add a journal transaction. Come over here, paid utility bill to GA Power. Drop down here, and oh yeah, you want to change this, I guess, to the 5th. And drop down here, and let's find the expense, utility expense, under income, under expenses. Be toward the bottom because it's in alphabetical, remember. Utilities. And it doesn't have to have the word expense associated with it, because oftentimes we don't. We just know that the utility bill payment is an expense. And was it $375? I believe it was. But I'll check that to make sure of it. And then come down here, and it's paid in cash. So again, come down until you find your cash on hand. And over here, $375. Again, we know that we're in balance. We'll save. And we should see $375 pop up over here. And so what we know is this thing is working dynamically. In other words, every time I make an entry, it updates the file. So that if I were to pull an income statement right now, I would probably have just a little bit of, no, I probably wouldn't have any income, because I had $1,500 worth of income, but I spent for expenses $300, $200, so $500, $875, plus the $715 that I made in the first entry. So I should have a little bit of a loss. And let's just check that to make sure that's the case. So if I come down here to reports and I do the income statement, and you see that it pops up with $1,500 worth of income, a operating expense of $1,590, or a $90 loss at this point. And we could look at the details, and you see here that you had $715 in interest, office supplies expense of $500 because it accumulates those. You had a $300 and a $200, and utilities. And so at this point, we are exactly right. So go back to your accounting side again, to transactions. Pop over here to the next one, paid Tifton Public Service water bill for $90. Well, the water bill is also a utility. We treat utilities as water, gas, power, oftentimes trash pickup, all of those things that you pay out every month to the city or the power company, depending. Where I live, everything is in one bill. So I pay for my water, my trash, my sewer, my electricity and gas, all in one bill. All right, so here we are, $90 for utilities again. So I've made it pretty easy for you. And let's see here, more, add a journal transaction. I think it's still on the 5th. not a big deal either way. But paid water bill. Now, in this case, because we're paying them outright, we don't have to worry about having set up a payable from the previous month. For those who would wind up going to Small Business Administration, we have a 3-month, so it's 1 month for 2101, 2 months for 1 month for 2102, and 3 months for 3200. The small business accounting 3200, and when you get into 3200, it's pretty much the same, but you have to set up the payables at the end of the month and then pay them as you go through. So instead of paying any expense here, you're going to be doing a payable because you've already paid you've already recorded the expense. But we haven't done that here. So let's pop down and find utilities again. And it's $90. And then over here, cash in hand, on hand, credit of 90. Again, I'm in balance. Save the entry. If you don't save the entry and you just go to the next one, it won't record it. Okay? You have to save each one every time you do it. And the next one's exactly the same as the last one. Utilities expense, cash for $225. Now, this is print expense. So I'm going to just let you do a few on your own here, although I will show you or tell you how to do this one. Created billboard art for Levinson Equipment, $5,000. Levinson paid 1/2 the bill in cash, the rest is charged to their account. So the way that it's going to be done is there's going to be a debit to accounts receivable Levinson. So that should be something like 120-02. You will have a debit to cash for $2,500. And you will have a credit to print advertising, that's the income side, for $5,000. Okay? So let's just I'll do through this one and then let you pick up from there. So let me pay the gas bill here for $225. So more. Journal transaction. Again, utilities. And let's change this date here to the 5th or whatever it is. Paid gas bill. And you can make this as, as detailed as you want to. And again, utilities, $225. Paid it in cash, so you're looking for cash on hand. And $225. Credit because you are reducing your asset here. Okay, assets go up on the left, that is the debit side. They go down on the right hand side, and that's what's happening here. And come back over here again, put a little yellow thing on here showing that you've done it. Paid master print $375, and it says that you paid it. So you paid it in what? You paid it in cash. $375 for print brochures. So let's come back over here, do another entry, and whatever this is, the 5th or 6th or whatever. And now I'm looking for print advertising expense. Print supplies expense, I'm sorry. Print supplies. There we go. $375. And it was paid in cash, so I'm looking for cash on the other side. Again, no difference. Save. Pop back over. Highlight it. Give it a little bit of yellow. And now let's do this one. And again, I didn't create the accounts receivable for Levinson. That should be for you, I think, 120-02. All right? And I showed you how to do those, but I think I showed you in another section. I haven't put it in. In other words, I haven't created it for the chart of accounts over here yet. All right, so created billboard art for Levinson 5000. So that's going to be billboard revenue. Okay? More. And I might have said print revenue before, but I meant billboard revenue. What did we get? Well, we got half of it in cash. $2,500. Come down to the next line. We got another half of it in accounts receivable, but now yours should say, must say actually, accounts receivable Levinson equipment. $2,500. And now add a line. And now what we're going to have is the sales, the income side of it. This is how we make money. And shoot, I don't have it yet. Yeah, I didn't put that one in, I guess. So let me see if I can back out of this and add that. Chart of accounts here. Come down to income if you haven't already done it. And whoops, income. Print advertising, 401's radio advertising, add a new account. Type is the income. The account name is billboard revenue. Account ID is going to be 400-03. The 400 stands for the income, the 03 stands for, in this case, billboard revenue. We already have print revenue and we have radio revenue. And just save it. And so you now see that you have this one. Actually what I did was I labeled them 400. Let me go back here and stay consistent. Edit this account. Why isn't it letting me edit the account? Type is income, billboard revenue, edit account ID 402. That's what I was looking for. And save. And now you see that I have 400 for print, 401 for radio advertising, and 402 for billboard revenue. And I could have done it 400-01, 400-02, and so forth. Been the same thing, same idea. All right, transaction again. Let me go back here to, let me see this last one. This is the one that I started on. And let me edit this thing. And come back up here to the, whatever it is, the 6th or whatever. And now we have accounts receivable, and yours should say again, accounts receivable Jones, 2,500. We got some cash, half of it in cash. It's 2,500 because cash goes up on the left and down on the right. So we have to add a line now, and because this is what we call a compound journal entry. And now come on down until you find your income streams and find billboard revenue, and over here 5,000. We got $5,000 worth of revenue, but we have it. Some of it's accounts receivable and some of it is cash. Now, when Levinson pays their particular accounts receivable, this guy, when Levinson pays that, you take it out of their account. So build Levinson on account. This is just to give me a kind of a trigger that lets me know what actually happened to this particular item. Okay, so that takes us through the very first group of transactions. Actually, that was June the 12th. Didn't miss it by much, did I? Okay, it doesn't matter. As long as I'm always in June and I'm not on the 1st of June, I'm good. All right, so the rest of them are on you. Okay, so start entering the rest of these transactions. When you get down to the depreciation side, if you have any issues or problems, questions, whatever, all you have to do is send me an email or give me a call, and I'll walk you through that particular transaction. But that's what we have for today. And so we know how to do an amortization schedule. You know how to find the payment amount for any of these items. You know how to do some of these entries. So let's see how many entries you can do on your own and still get the proper outcome. So thanks for your attention, and that's it for today.